Hello and welcome to the Good, Bad and Ugly weekly review of 26th of July. Please read the disclaimer. And this week from the Weekend Investing Research Desk, these are all the wonderful stories that we shared with you. Why gold is a must. Are we at the cusp of a correction? Global market cap maths. How China and Korea dealt with the FNO frenzy. This is very, very interesting. When will emerging markets rally? Domestic ownership is taking over foreign ownership. How young India is leading, and the pros and cons of concentrated investing. This and a lot more on the Weekend Investing app. You can download it on Google and App Store. Nifty this week was a complete seesaw. For the first few sessions, we were down and out. Of course, the budget was there in the last 1 week. And on the budget day, you saw wild swing in the market, but very, very stable post the budget. The next day was still a inside day to the budget. The third day uh, post budget was also an inside day, but still not really giving up. And Friday was just a blockbuster up and up day, and it closed at a new all-time high at 24,851. This was completely unexpected by most market participants, and FIIs came and bought a couple of thousand crores on Friday. So Nifty weekly again very, very strong, no weakness at all, and the juggernaut, you can say, continues. In terms of percentages, Nifty went up 1.2%. CNX 200, CNX 500 were up about 2% also. Small caps took the lead 2.8%, Nifty next 50 2.9%, mid and small cap at 3%. So really the bulk of the market was really shooting up very nicely. Now you can see small caps are at 23.2% for financial 25, which is extremely robust. In terms of weekend investing strategies, MI India top 5.1% in just this week versus Nifty of 1.2%. Amazing run on India top 10 this week. ATH also doing very well at 3.8%, all cap at 3%, with Wealth Builder at 3%, MI30, ATH2, MI25 also at 2.8% to 1.8%. Capital Compounder was slow this week, 1.1%, yet for the financial year it is still leading at 33.9. NNF10 was muted this week at 0.9% versus 2.9, but 27% on FY25 so far. MI35 was also muted. So there seems to have been a rotation in stocks where stocks that were running very hard leading to the budget did not do so, and other sectors were leading the market. So it will take time for this rotation to happen. So MI20 and MI35 have taken a back seat despite small caps moving forward, but for the financial year, they're still doing okay. MI Evergreen was totally flat at 0.1%, and NG 50/50 due to the cuts in duty on gold. The gold part of it was compromised. Pharma taking the lead this week at 5.8%, along with autos at 5.2%. So this is a new leadership that we are seeing, pharma and auto now. Public sector enterprise stocks, while up 4.4%, uh, have still maintained 25% gain for FY25. Commodities, consumptions, energy stocks, infra stocks, FMCG stocks, all doing well. The only laggards this week were real estate stocks, Bank Nifty in all, primarily led by private banking at minus 1.9%. PSU banks also have not rallied at all. In fact, for the financial 25, they are the weakest sector amongst all that we track. Again, on a longer term average, autos and pharma are ruling the roast. But in a very short term basis, FMCG is running hard, IT is running hard, pharma is doing well, autos are doing well, and consumption stocks. That is the sectoral momentum for the very, very short term. But if I take an average of 2 weeks, 1 month, 3 months, and 6 months, you can see that the same five have sort of uh, been important in terms of the sectoral momentum. What is really lost momentum suddenly is public sector enterprise stocks here, right here, going from fourth position to 12th position. Some give up in energy stocks and some in commodities as well. Weekend investing strategy spotlight. So MI Evergreen performance since going live on 27th December is this here. We've completed 2 years and 7 months. Absolute returns are right here. Um, this is a strategy that invests in gold as a fixed percentage of 25%, and that is what the percentage, the uh, kicker comes in when the equity part is not doing well. Gold uh, is hedged at 25%, and the portfolio gets hedged there. So this is, you can see from July of 2020 to, you can see how the MI Evergreen has really taken off versus CNX 200, virtually a doubling of returns versus the underlying benchmark. This is a 20 stock strategy which invests in CNX 200 stocks, and 25% is allocated to gold. Recommended capital is 5 lakhs to 30 lakhs, and outlook should be 4 to 5 years for this strategy. And this we will rotate only once in a month. So that's all for today's GBU. I hope you have a great weekend, and I'll see you in the next one. Thanks. Bye.